Gold has started to consolidate following the sell-off that we saw at the beginning of October. Once we broke below 1300, we saw the floodgates open. Hedge funds reduced their exposure dramatically. The past couple of weeks, we've seen a record redemption from hedge funds. So at this stage, they removed more than 50% of what they held, the record holdings they had back in July. ETF investors, just like May, initially were buying into this weakness, but just last week we saw quite a bit of a reduction. Almost 18 tons was taken out on Friday. That's the biggest one-day reduction since 2013. So we are settling into a bit of a range here. We have support at 1250. We need to make it back above 1280 in order to start looking for an improvement from the technical perspective. The drivers at the moment, the key negative driver this month has been the dollar, but we have found that even though the dollar has been showing some strength, we have started to see gold actually holding up reasonably well despite of this dollar strength. That has resulted in something like gold price in euro almost moving back up to the level where it broke down from back in early October. Also moving ahead, the FOMC meeting in early November is probably going to be a non-event. It's not, they're not expecting to make any changes so close to the US presidential election. So really the focus is on the December FOMC meeting where a rate hike at this stage is priced in by almost 70% certainty. And so just in the short term this week, we have a host of US Fed speakers out again. They have a deadline after which they're not allowed to make comments before the next FOMC meeting. But we also got growth data from the US. So these are all adding up to the expectations for how rates are going to progress over the coming months. Bond yields also went into a bit of a tailspin. Bond prices went into a tailspin earlier this month. We've seen bond yields actually start to fall again, and that is also one thing that can be ascribed to as supportive for gold. So many moving parts at the moment. I think the key is that we've seen that the speculative interest has been sharply reduced, so the selling pressure from funds has been removed at this stage. We probably need to break below 1250 in order to see that accelerate once again. Likewise, the dollar has, despite of the strength we've seen, not been a one-for-one driver of gold, and that does indicate there are other focus points in the market, and it does also indicate that this sell-off we've seen has been met with renewed buying. Whether that will continue as we move into November remains to be seen. We still think that we're not out of the woods yet, but from a medium to longer term perspective, we still see gold higher at this stage.